All right. Welcome to Coffee with Marcus and Mark, the #1 stock market show on Spotify and one of the most popular market updates on YouTube. In this show, we talk about what's happening in the markets and how we're trading them. Now, today is Wednesday, January 17th, and stocks are down for the second day straight. Retail sales data has some traders concerned about rate cuts. Treasury yields are putting pressure on stocks and some bad earnings reaction. We'll take a look at some earnings movers, plus what's going on with our new Win the Fear WTF trades and OXY. If this is your first time here, my name is Mark Hodge. I'm head coach at Rockwell Trading, and let's go ahead and get started. Now, I'm going to need to share my screen, which I forgot to do before we started this episode, and let's click that. What does this red button do? There we go. So here we have the S&P 500, and the S&P 500 down 0.6% today. The Dow Jones actually just flat, recovering a little bit after a weaker start. We have the NASDAQ leading the way lower, down 1%, although recovering from some early losses. Let's look at the S&P 500. So yesterday, stock struggling, the S&P 500 lower, coming off of session lows, so a little bit of a rebound there. Let's look at a 5-minute chart, and we can see what happened yesterday, but then also where we've traded today. So yesterday we made session lows in the afternoon, and in the last hour and 45 minutes, coming off of those session lows, recovering from some of those losses that we saw throughout the day, ending the day lower. Today, a gap down and initially sliding, but finding some support here and a slow grind higher right now, trading at session highs, although we're still down for the day, a little more than 0.5% in the S&P 500. Now, what's contributing to these losses? Well, if we go to PowerX Optimizer and we look at the economic calendar, we see that core retail sales coming in hotter than expected. So better than expected retail, which is great for the economy. However, when we take a look at what this means and how it could impact the Fed's decision on whether or not to cut rates sooner than later, when we start to see a resilient economy and decent jobs, it just means that the Fed could keep rates higher longer to help combat inflation. And that seems to be the narrative today with today's drop. So core retail sales coming in at 0.4% versus a 0.2% increase that was expected. And we saw retail sales at 0.6% versus the 0.4% that was expected. And if we look at some earnings too, this is where we had a few earnings movers and some negative reactions. So here, looking at the calendar, if we take a look at Charles Schwab, let's do this. Let's go back to the wheel analyzer, and I want to look at Schwab and a few others. Schwab down today. A nice recovery, down more than 3% at one point, even more than that. Right now, down 3%. So starting the day about no, not even that. Let's measure this. Let's do it right. So starting the day 5% lower, 5.5% lower, actually dipping as much as 7%. Right now, down just 3% there. So pre-market, I think it wasn't as bad. And then when we finally opened the session, it looked worse. And if we look at some earnings data, let's pop actually back over here and go to Schwab. There we go. Let me go to a daily. And better than expected earnings, but a bigger or a worse than expected revenue number. So numbers were mixed, but traders not liking that at all. And maybe some concerns there with banks in general recently. So Schwab was down. If we look at Caterpillar Caterpillar, another company, down 2% today. And if we take a look at Powerex Optimizer, go back to the earnings analysis tool in the calendar, we see that US Bank Corp was another one that reported earnings before the bell. And when we look at US Bank Corp here, USB, sliding a little bit, not as bad as Schwab here, but down 1.6%. So long story short, today really all about the retail sales data that was released, and then also some earnings reactions that were negative here. And we still have an active earnings calendar, and it gets busier next week. So if we go back to the earnings calendar, we do see Kinder Morgan Discover after the bell today. Tomorrow, Fastenal, some other banks here, PPG after the bell, Schlumberger, a few other banks on Friday. And then when we move into next week, it really picks up with some big names. Johnson & Johnson, Procter & Gamble, Verizon, General Electric, Netflix, Tesla, Visa, Intel, and others. So kicking off earnings and starting to see some reactions. Banks having a little bit of a rough time there. So why don't we look at some trades? Let's look at what took place today. And the WTF, win the fear strategy, gave us some signals yesterday, also giving us some signals today. So let's first look at open wheel trades, and we'll take a look at OXY, a trade that we took yesterday. And then let's pop over and take a look at a couple of WTF signals to see what they're doing and what we considered this morning. Now, to review open wheel trades, CSIQ. Marcus and I, we actually sold puts. The 21 put, we sold them yesterday. Those 21 puts are in the money, and I'm totally okay with this. So we collected 32 cents. I think Marcus got 30. I had to beat him by 2 pennies just for fun. And we sold this 21 put. So we've decided that this would be a level to consider doing a rescue. And if I do a rescue here, I add to my position. That brings my cost basis down to, I want to say it's either $29.92 or $29.29, something like that. Either way, it gets me right around here. And so even though rates, yields are moving higher, that is, and putting some pressure on stocks, which we're almost seeing an exact inverse relationship between those yields and CSIQ. In fact, let's look at it. If we go to the 10-year, we see 10-year yield back above 4. And if we look at the low here, 12.27. So on December 27th, the low with yields coming down, got down to the lowest in December on 12.27 and has since moved higher. Right now, the highest that we've seen since December 27th. And then if we look at CSIQ and we see, okay, where's this high? Well, December 28th was the high on this rebound here before pulling back. So an inverse relationship right now between yields and CSIQ. It's almost picture perfect there. If yields come back down, then CSIQ, we've mentioned this all along, kind of snowballed into a bigger concern or bigger issue that, ended up being a bigger drop than we expected. But we see that interest rates and higher yields are creating some issues for solar in particular. And if there's some lightening of that, where there's light at the end of the tunnel, then solar should improve. So I'm okay holding CSIQ. I'm okay holding onto this and managing the trade. That's why I decided to sell the 21 put, just like Marcus did. Right now, the 21, even the 20 would be possible. The 20 for Friday, it only gives you 15 cents. The 20 for next week gives you 45 cents. I think it's a good rescue level. Can we fall even more? Sure. There's no guarantee we won't, but I like this 2021 range. And there's no guarantee we're going to stay below 21 on Friday. We'll have to see. If we are below, we get assigned. If we're above, we will consider selling rescue puts again. So that's what's going on with CSIQ and with NEE. A little bit of a pullback today. Open lower, rallied a little bit, came back to the open. Right now, just trying to creating more of a range here between 59 and maybe 63, where before we had this nice steady increase. Also with yields going a little bit higher. This is a uh, dividend play or income play for a lot of portfolios. And when you're competing with higher yields, it might not be as attractive. So again, I think we're going to see yields come down a little eventually. And well, I think with certainty they'll come down eventually, but rather soon, in my opinion, even if we get a little bit of a spike temporarily, and then NEE will continue its march higher. Now, if we look at OXY, this is one we put on yesterday, and this is in the money. This morning, it actually opened up even lower. Today, opening up at 56.04. Marcus and I, we both sold puts at 57. I like OXY at 57. Here, if we look at this chart, just real nice ranges and support. To me, this is a beautiful wheel chart, and the Berkshire Hathaway investment in OXY also kind of helps. You hear they're adding, and then all of a sudden it spikes, right? So I like these levels here. I'm happy to own OXY at 57. The week is not over. We'll see if that ends up being the case or not. Right now, OXY at 56.47. Both Marcus and I have short puts at 57, and we're open to getting assigned and owning shares of OXY at that level. UPS pulling back. This isn't what I wanted to see. Getting down to 154, much lower today. Got as low as 152.02, but now trading above the open. I was really hoping that we'd stay in this range. However, it does look like there's a lot of white space on the way down to these lows. But if we go back to September, it does look like there was a lot of interest here right around 152, which is where we had support today, or where the low was. And we could see this type of range. Maybe we now see a range between 152 and 162 based on where we were trading. Nonetheless, not what I wanted to see. My break even is 161.06, down a little bit, but at this point, nothing for me to do with UPS. Now, with the WTF, win the fear strategy. Let's look at the WTF analyzer, and in the S&P 100, there were a few stocks to consider. If you want to know the stocks that we decided to trade, give it this video a thumbs up. Trades for likes, right? So, it was interesting today. A lot of banks popping up on the list, and this is where for new trades, the strategy over time and just taking signals. I love the numbers. It's a consistent strategy. We mentioned it before. If I take 10 trades, of course, it could be that you have 10 losses in a row, right? And then you could have 10 wins in a row. But over time, I believe that out of 10 trades, I'll have 7 winners, 2 small losses, and 1 stop out. And even that stop out, technically speaking, it doesn't happen 10% of the time. It's more like 6% of the time. But I think that that's just a good reference point where out of 10 trades, and this is what we see with traders who are trading the strategy, typically we're at about a 70% winning percentage, 7 wins, 2 small losses, 1 larger loss or stop out. And based on the historical trades here, some of the recent candidates didn't have the best winning percentage or profit factor based on historical trades. So I don't think there's anything wrong for anybody that has the software and decides, you know what, this trade isn't for me. On the other hand, it could be that after a string of losses, and if we're trading an index like the S&P 100, it could be that you have a little string of losses and the next trade is a win, right? Or maybe some of the performance in the past was, pandemic related, right? Here you have 3 losses, 2 full stop outs in MS. This going back to the pandemic. Now, I think that it makes sense to review that, to incorporate that into the data. So we could analyze things. I mean, here's USB. We're out of the last 7 trades, 2 wins out of the last 7, and out of those last 7, there were 2 stop outs. So performance not necessarily ideal, but signal-wise valid. Because of that, I decided, hey, I'm going to trade these. I'm going to take these signals. Marcus was filled on 2. I was filled on all. I took half positions though because of the weaker performance. Bank of America right now, we had the gap down. Got in below the open. 31.72 was the open. Actually, I'm going to pull something up to share exactly where I got in. Let me do this. So WTF, win the fear. Bank of America, new signal today, and I was filled at 31.72. So right at the open, got filled there. And right now it's up a little bit, reversing. That's exactly what we want to see. That's exactly what we expect from the signal. If we look at Morgan Stanley, I was filled at 84.16. So right now the stock's trading at 84.26. So up a little bit on Morgan Stanley. Got a real good fill here. It looks like technically we opened at 84.85, but my fill was 84.16. Looking at Schwab, this is working out very nicely. The open for Schwab was 60.93. I was actually filled at 60.73. Right now trading at 62.68. So nice reversal here. This is exactly what I expect with the strategy and what we're trying to achieve. Stepping in, being a buyer when there is some fear in the market, looking for a quick reversal. And typically we're in a trade for 4 to 5 days. If we look at US Bancorp, here we see this one down a little bit. I was filled at 41.38. Right now, 40.81. No big deal for me, but out of these 4, up a little bit, and we'll see next couple of days if there's a little more upside. That's exactly what we're looking for. Bottom line, I took all the signals today, but because of the performance, I traded half of a position that I would typically trade. So that's the WTF strategy for today. That's an update on our open positions. A lot going on. So to recap, markets focusing on retail sales, how that might impact things. Yields being higher, putting some pressure on stocks. Earnings, there's some bank earnings. Next week really gets busy as far as trading opportunities that we're considering. Rescue mission on CSIQ potentially. Well, we started it. We'll see if we get filled or assigned. And we have OXY. We'll see if we get assigned OXY. Oil and gas seeing a little bit of downside pressure, but I think there's an opportunity there. So we have some skin in the game with OXY. And then with these WTF signals on the pullback, we're looking to win the fear and make some money with these trades. Right now, Schwab working out very nicely. We'll see what happens and if we have exit signals this week or early next week. That's going to do it for today's stock market update, or Coffee with Marcus and Mark stock market update, whatever you want to call it. Glad you are here with me. And Marcus is at an event in Vegas, so he's going to be joining me, I believe, tomorrow. Yeah, looking forward to another great day of trading. So if you like the video, please give it a thumbs up. If you're new to the channel, please subscribe so you get notified when we do new sessions and videos. And if you're liking the WTF signals and the wheel in general, leave a comment, let us know, and we'll see you back here tomorrow. Till then, happy trading, everybody.